In this video, I'm going to talk about how captive insurance companies can help during a pandemic. Now, we just went through 2020, which was a particularly bad year and challenging year for the insurance industry. It's not just due to COVID, but let's talk about it. What was so bad and challenging for the insurance industry? First, claims, the number of claims dramatically increased. In addition to the claims increasing, the amount of payouts and the amount of claims also shot up dramatically. And one thing that's been happening to insurance claims over the years is what's called social inflation. And this is juries just for, say, an insurance company seeing their name and just giving huge awards to the plaintiffs. In addition to that, you have emerging risk, not just in the US, not limited just due to COVID, but these emerging risks are happening all over the world. One thing you may not know is every quarter since the fourth quarter of 2017, insurance premiums have been going up, increasing claims, increasing number of claims, and insurance premiums have been on the rise as well. So let's talk about the effects of businesses due to a pandemic. Now, first of all, there's business interruption. I recorded a video earlier this summer about business interruption insurance and why it wasn't probably going to be covering pandemic. In addition to the business interruption, you also had event cancellation. I can't tell you the number of events, the trade associations or industry events that I was supposed to speak at in 2020, they were just basically canceled. And many of these are scheduled years in advance. So as a result, they pay premiums. They're going to suffer losses because when they have their events canceled, a lot of them are refunding the purchase price of those events and trying to negotiate to get the hotel reservations and other stuff back. But these big events all over the world have been canceled. And not everyone is like Wimbledon. You may have read about it in the paper, but Wimbledon had a pandemic insurance policy that covered event cancellation. So as a result, they got hundreds of millions of dollars back from insurance companies who've been insuring that risk for years and years and years. So you have business interruption, event cancellation. You also have laid off workers. You know, many businesses have had to shut down completely due to the government regulations, or they've had to furlough some of their workers. You also have supply chain interruption. Now, supply chain interruption is the supply chain for a manufacturing business is very important. Now, when they couldn't get raw materials, there were a lot of businesses that actually had to change how they were manufacturing their product to actually get it out to the people that needed it. Some businesses have seen a loss of their customer base, some pretty dramatic. During the pandemic, if people aren't buying your stuff, you know, the business can't get the revenue. The business could be shut down due to government regulations. There are some businesses during this that are local restaurants, hardware stores. They were reliant on people coming in, their customers coming in and meeting with them and buying their products. They've had to switch online. So now some of these are doing online transactions. And more importantly, they now have increased cost due to having to change their delivery method. Instead of standing there and providing the product, they actually have to go out and deliver the product to the end consumer. In addition to all of these, you actually have inventory loss. So we have clients on both sides where one is they have a surplus of inventory because they've lost their customer base. People aren't buying it. Their business may be shut down. But then we have some manufacturers, particularly in the food business, who have seen their inventories go up, but it's a perishable good. So you actually have wasted inventory. So you can either have too much inventory or you're wasting your inventory. So that's a real event during a pandemic. So how can a captive insurance company help during a pandemic? The first thing it can do is it can provide liquidity. And liquidity and cash flow are key to a business. The captive insurance company, we have many clients who've been paying in year after year after year into their captive insurance companies for just sort of an event. What that means is they bought a business interruption policy. So our captives have been covering business interruption due to a viral or bacterial event since around 2015-16. As of right now, we have over $20 million in claims that are being processed for business interruption due to the pandemic. In addition to that, with the changing workforce, a captive insurance company can protect the human capital that's key to every business. That can be in certain ways like indemnification protection, voluntary benefits. The captive can provide the funding for telemedicine for some of their employees. And it can also help with the supply chain interruption. Many of our captive insurance companies have purchased supply chain interruption insurance. The Port of Los Angeles was shut down, or they're not getting any of their product from China. They actually have to fulfill their contract. So this gives them the money to go out and pay additional money to get the raw materials that they actually need. Another way, and really the most important way, is captives provide liquidity when the businesses need it the most. And that can be in the form of dividends. We have many clients who in 2020, they actually went out and said, okay, I want a dividend from my insurance company to be paid back to myself, who own the captive insurance company. This gives them the money they need to then invest in their business and keep it going. Now, it's subject to regulatory approval, but it wasn't very hard to get regulatory approval to give these businesses the money that they need to keep the doors open. Another way is intercompany loans. Businesses can go to their captive insurance companies when all other funding vehicles are not available. They have the ability, again, subject to regulatory approval, to do a short-term loan from their captive insurance company over to their business. Now, it has to be approved by the regulators. It has to have a set interest rate, and it has to be a loan that you would get in the traditional market. But unlike going to banks that could take a long period of time, submitting it to the regulators to get approval for a loan from their captive is a relatively short fix for a temporary cash crunch. Now, once they got their PPP money, once they got other traditional financing, then they had the ability to pay their captive insurance company back, but it gave them the money that they need. Another way that improves liquidity for a business is there's a lot of services that a business buys. It could be from risk controls, or it could be environmental studies. It could be wide ranging that are normally paid by the business, but when the business doesn't have cash, the captive insurance company, it actually can pay for those services because it's part of their overall risk management profile. And then we hit on this earlier, business interruption policies. Captive insurance companies have been writing business interruption policies that cover a pandemic. So we have many clients that have submitted for business interruption policies. I think at last count, between dividends that have been approved by regulators and business interruption policies, we're crossing $50 million in liquidity just to our clients alone for events and cash flow issues due to the pandemic. Our clients who've been putting money in a captive year after year after year, they have enough money and enough liquidity to make sure that they can weather out this pandemic storm. Thanks for watching. My name is Wes Sirk. I'm the Managing Director of Risk Management Advisors, a risk strategies company. We just redid our 2021 Ultimate Guide to Captive Insurance Companies. So if you put a comment down below, we'll make sure that we send you a copy of this. You just say, I'd like it, and we will send that out to you. You download it, but it gives you all the ins and outs of captive insurance companies. Thanks for watching.